Hi, and welcome to the Market Alert for Wednesday, the 24th of November 2021. Just before we get into the markets, we're heading into Thanksgiving, where the markets will become quiet. Half-day trading today, closed tomorrow, half-day on Friday. I've got a lot of videos to record and updates for the software, so I'm going to take advantage of this quiet time, and I'll resume on Monday. So for those of you that celebrate Thanksgiving, have a good one, and I will be back on Monday. But yesterday was an interesting day. Stocks ramped to a green close as oil soars, while surging yields hammer the tech stocks, with Gamma Run clenched after Friday's major option expiration, which obviously we covered in Friday's Market Alert. News today, we've got, let's have a look, we've got German info, that's at 9 a.m. And then the US, we've got quite a bit today, the usual stuff. The GDP figure will be an interesting one. That's out at 1:30, along with durable goods, unemployment claims, core PCE price index as well. That will also be an interesting one. And then tonight, the biggie, of course, but not that big because we had the Federal Reserve members out all last week. But they're releasing the meeting minutes tonight at 7 p.m. And then tomorrow, of course, we move on to the US market being closed. And then we've just got the ECB and Bailey speaking, and these after the market closes in the UK, and lunchtime for Lagarde. And then on Friday, just in case anybody is still in the markets, we've got ECB Lagarde speaking there, and a Treasury report for the US. I mean, the markets will still move. It's just that they'll be, generally in the one direction, as we get normally when the US markets are closed during holidays. So let's have a look at the Dow, and I'll find it for you in a second. There we go. So yesterday we saw the Dow trading down to the 35,495 is what we drew in yesterday when drew from this line across, and that's where the market found its support. It was just over 38% also, but you can see they're heading towards the 50 before the buying came in, and certainly did come in as well if you look at the volume. And the market attempting to move back to the upside now, which again you'd expect because they don't want the market to go down. The option expiration is certainly out of the way now, so it's a case of can we actually bring the market back, the forced selling of the derivatives. These are the upside targets, and there's every chance this will happen given that we've got a US holiday. The electronic market will continue to trade, and they'll try and do whatever they can to bring the market back, which is the usual thing if you go back and look this time of the year. So initially yesterday when the US market opened, we had a bit of a sell-off in the early part of the morning. The market was then brought back and then sat sideways for most of the afternoon, and then eventually before the close, as it said in the headline, the market was ramped back to the green area there, bringing prices back to where they wanted them. And in the DAX, which is this one, again you can see also trading down sharply to this area here where there was demand before, and coming back above the 78.89. But let's just get rid of this and let's have a look a bit closer to this. If we go from here to here and bring it back, so from there up to there, and we see we came back also in that 38 to 50% area for the DAX there. Still below the 20 bar moving average at the moment. It needs to close above this and get back above the 5 bar. Let's have a look on the upside, and you can see there we've got the areas of resistance there from the fibs. Let's just drag the chart over a bit and spread this out, and there you can see a bit more clearly now where these areas of resistance are, should prices continue to move to the upside. Also again note the huge volume and prices coming off the lows yesterday, and that's because if you have a look at the 30-minute chart, you will see a lot of volume as the market sold off in the morning session down to the S3, and then prices coming back And then you've got a classic retracement there, and as the market is now starting to move higher with the Dow. In the 2-minute chart for yesterday, let's just have a quick look at this. So from the start, really, we saw the futures coming under pressure. It was already down 100 points by 7:30. The market then bouncing back 50, and then the selling coming in from the start, and the continuation down to the S3. As I've mentioned before, when prices get to the S3 pivot, 90% of the time the market will hold at this level, and that's precisely what we see here. We had a test down at this level. We got some demand coming in, and then the market was immediately brought back through the morning part of the session, and all the way through to lunchtime as well, back to the S1. And then in the afternoon, it was a very interesting picture to kick off with, because the market moved higher. There was a lot of volume and a battle, but again, you can see the demand coming in there, very high volume. Market taken up to Monday's low, and then you can see the sell-off in the DAX. The Dow actually was fairly quiet at this point, and it was just dominated with a move all the way back down just past the S2, and then we had a full 100% double bottom there, and then prices retracing around 78% there. And then overnight prices have also followed the Dow, which you can see there, currently above the DP, the 200, and just holding at the 20-bar moving average at the moment. Crucial area though, back to 16,000, which is very important for this market to hold at this level. And then finally in the metals markets, well, you can't say I didn't warn you yesterday. They hammered the silver market, and what was so amusing, I have to say amusing about this, is if you have a look at the dollar, it never moved. This was just a blatant attack by the silver shorts and the banks to move the market lower, and it traded right down to the 89%, which you can see there, that we drew in yesterday morning, and also to the 50-bar average there, which is the blue line. I've color-coded these just to make it easier to see. You can see sitting right there on the 50-bar moving average. Is the Dow move over? Well, I don't know. We'll see, because again, say it's thin trading today, the electronic market tomorrow, and on Friday, of course, half day as well. The London fix will dominate, of course, on the electronic tomorrow. Or rather, the electronic market's reaction to the London fix will still go ahead tomorrow. So we'll have to wait and see, but it may not be over for the downside. Like I say, I wouldn't be surprised if we don't have an attempt to get down to this sort of level. But at the moment, we're certainly in oversold territory with the average of the stochastics, which are in the lower window. I'll explain more on these as we go forward, and I've recorded the videos to these and added them. So yeah, at the moment we've got silver that's finding a bit of support there. Let's have a look inside of this in the 30 minutes. You can see yesterday they decided to hammer it through the 23.50, and then it found support as the selling fell off. Again oversold, but with some divergence in the stochastics here. So again, chance the market could bounce, and it did, and move back above that 23.50. Depends whether it holds. We'll have to wait and see. But like I said, there's the opportunity to try and force the market lower during the next few days because of the lack of US traders around. Gold also again suffering, but not as much. And I'll show you in a second in the silver gold ratio. This trading down to bang on 78, and then also the 200 MA with prices trying to recover back above this. You've also got demand there as well, which you can see with the D there. That's saying that there was demand. That means that there was, during this yesterday's trading session, there was more buying than selling, because the range of the bar was less but the volume was greater. And also too that we're looking in the oversold area there as well. So again, expect a bit of support there also. And then finally, just a quick look at the gold silver ratio, and you can see yesterday this was really ramped up and managed to find resistance here as silver rallied back quicker than gold, and then it came off a bit. But at the moment, we can see that again we're still at that sort of, well, we've got a sideways range now, haven't we, in the gold silver ratio. So it'll be interesting to see again how prices react. But no surprise to me whatsoever. As I said yesterday, they would use the thin markets to slam the price of silver so they could get out of some of their short positions, and that's precisely what they did. Easy to predict with the manipulation of these markets now. Okay, that will do it for this one. Like I say, have a great Thanksgiving if you celebrate, and I will see you back on Monday morning. So have a great few days, and see you on Monday. Thanks for watching. See you in the next one.